We're live.
Hey everybody, it's Paul here from Better Call Paul, and with me is JJ from Convos with JJ and Shawn from Better Call Paul. This is our second get together, guys. How you doing?
I'm good. How about you guys? Just enjoying all the market, everything that's been on sale for the last few days.
I mean, honestly, I haven't really been checking that often because I've been so busy. By the way, audience, we're actually filming this. If anyone is curious, at 10 p.m. Eastern Standard Time. So pretty much almost bedtime. So
For
yeah,
all of
so I
us.
do apologize ahead of time if the conversation is kind of choppy or whatever. But yeah, doing
Yeah.
well overall, but it's been a long day. What about
I
you
think
guys?
it's been a couple weeks since we put out our first video, right?
It's been
So
about 2 weeks, yeah.
we all wanted to get back together, and Shawn and I are going to kind of go over what we've done since the last time we talked to JJ, and I'm sure we have a few questions for him because we both have opened our margin accounts.
Ooh,
We're finally
exciting.
in the margin game.
Yeah, been excited, but nervous, very nervous.
Yeah, I think you opened yours before me, didn't you, Shawn?
I did. I opened mine up fairly quickly. Linked it up to my TFSA. I'm just opening it up here. They gave me boop-a-doop-a-doo. They gave me $54,000 in buying power.
Ooh,
See,
okay.
okay, so
And
here's my first
wait,
question for you,
what?
JJ.
But
Wait, let Shawn finish first.
Go ahead, go
well,
ahead.
I was
Yeah,
going
yeah,
to say,
yeah.
considering my total right now with the markets being down the way they are, my actual all the money I have in Wealthsimple is only 47,000. So
Wow.
them giving me the
So
53,000,
is that
I
your
was going to say,
margin available?
yeah, margin available is it says my max buying power is just shy of 54,000.
That would be different to your actual margin available.
So that's what I was going to ask you,
Oh,
JJ. So because
Yeah.
sorry, yes.
mine says margin available, but then below that it says max buying power.
hmm
And so margin available is 106, but max buying power is 356,000.
So margin available, so there's a difference. But max buying power essentially is taking in that 30% requirement, whereas margin available is how much you can actually borrow. So assuming like so that would be 100% margin availability, whereas max buying power is how much it can fluctuate and go down, assuming that 30%. So that's why there's that almost 3x difference between the max buying power and how much you're actually allowed to borrow.
Oh, okay.
So
Because
Okay.
yeah, when I
yeah, so there is
scrolled
that
down,
difference. So in terms of actual how much you can actually borrow from the broker directly, using that margin availability would be a better gauge.
Okay. So
yeah,
the
Yeah.
margin availability. Okay.
yeah. So
All right.
when I scroll down, it says margin availability $16,077.
That
I
makes
like the
sense.
max buying power better.
Max buying power, essentially, like, it's say, for example, if that market goes down another extra 2%, then that, because it's X 3 times of what your margin availability actually is, so that could also go down X.
Oh, okay.
So better be careful, essentially. And that
Yeah,
3x would actually go down even more. It would go down even more assuming you buy stuff that is at either 50% or 100% margin requirements, because then that actual borrowing that way you can actually be allowed to get would be much lower than what you would actually be allowed to borrow against. So that's assuming you're buying stuff at 30%.
well, I don't know
It's
about
too,
you, Paul, but the only thing I've bought so far is the NCL. That's the only thing I've bought so far on my margin. I put $500 into it. Um, it, I, I get Paul knows me
Do you
really
like it?
well. You know what? Here's my little thoughts about it is, like I said, Paul knows me really well. If somebody came to me and said, "Hey, Shawn, here is a steak that is, $40 a pound, but it's delicious," I'd spend $200. But when it comes to spending money in my Wealth Simple account, which is going for retirement and all that kind of stuff, spending money on margin account worries me. I've been a little nervous actually buying anything using money on margin. So I'm
yeah.
thinking a small $500 first purchase, I'm going to let it sink in for a few more days that I'm borrowing money to buy something. I in my real life, I don't I don't use credit cards. I buy everything with
Mm.
cash or by debit card. The way I look at life is if I need a new stove or a new fridge, if I can't pay for it with my cash or my debit card, I don't really need it. So borrowing money to buy stocks is actually been a little bit of nerve wracking for me.
And you're the gambler.
I know.
I'm surprised you're saying that because I thought you weren't you, Shawn? Didn't you say that you were go big or go home, go big or go
Yeah,
home or something like that?
you're usually the risk taker.
It
Yeah.
surprised me too, guys.
I'm surprised
No.
you didn't go first into like all in on Tesla or something
No.
or a single
Well,
stock.
you know what? I mentioned to Paul when Paul and I were
All
chatting
in
the
on
other day.
MST, right?
All in.
Well, these
All
well,
in on
see, and
MST.
Paul and I talked about this the other day too. He sent me a message about somebody saying, what was that message, Paul? About the little MSTE going to zero or whatever it was.
You know, JG, did you by any chance watch Mike's Health and Wealth channel where he talks about how JP Morgan, I think, tried to do something that would delist I think MicroStrategy and hurt
Okay.
Bitcoin. I think they did something like that, right?
Okay.
Yeah, you'd have to look into it more, but basically it made it seem
What's the
as if,
gist?
well, basically they're trying to make it seem as if sometime next year MicroStrategy will no longer be like a listed company or
Okay.
Yeah, JP Morgan wanted any company that has X amount of percentage of their value invested in Bitcoin to be delisted from the NYSE or whatever stock exchange you're on.
Yeah.
And
Okay.
now Michael Saylor is just like he's fighting it. One of the reasons was JP Morgan has a giant it's in the
short.
billions of dollars short position against MSTR.
Yeah.
Big surprise, right?
Yeah, right?
Yeah.
Exactly. But now we're
I mean,
off
why?
topic.
Why else would they want to try to delist it? Because if they have a huge shorting position, if something
Exactly.
happens, well, guess what? They benefit.
Yeah,
So
that's right. That's what they're trying to do.
it's a complete conflict of interest. I'm not surprised they're doing this. Like I would say, for example, like any sort of news, anything that any company is saying, you have to take it with a huge grain of salt. Like, are they going to be beneficial in some way if any sort of these kind of market news happens? And so, well, big surprise there. They have huge direct benefit in
Yeah.
causing strategy to go down, basically, if something were to happen. Well, I wouldn't even worry at this point. It's all just fluff, at least at the moment.
It's like that the other guy who's always trying to short Tesla and short everything.
Mm-hmm.
Was it Michael Burry or
Michael Burry? Yeah, exactly.
right? He's always trying to short everything, right? So,
isn't he always trying to do some prediction every other day, and then once in a haywire he gets something right? Well, at one point, if you make so many predictions, you'll get at least one of them correct. Like,
yeah.
does that actually make you say, like, does that actually make you like accurate in terms of predictions, or was it just a fluke? Well, at one point you could get something right, but does that actually make you
sure? If you say every single day that the market's going to crash, one day you'll be right.
Exactly, it's bound to happen.
But can you pick the actual day now? That's what we'd like to know. Anyways, guys, but getting back to margin, I did sort of the same as Shawn, except I didn't buy ENCL. I went into Utes last week. I bought $500 worth of Utes.
Mm-hmm.
And UTES. And then this week I bought $500 worth of HDIV.
Okay.
So those are my first two positions. And I think like Shawn, I kind of just want to, and I think we're lucky it's kind of the end of the month now. So we're going to be getting the dividends pretty soon in December. And then we'll kind of get an idea of how much interest we had to pay, how much dividends we made, and see how it all works. In my mind, I still have to see how this works. I'm used to just getting dividends and not owing anybody interest.
Mm-hmm.
Yeah.
Well, essentially, it's kind of the same thing. Well, if you're buying, let's say, $500 worth. Wait, let's first off the bat, how much money did you actually put into that account?
Oh, I only put like $18.
Oh, okay.
I didn't put.
I would say
much.
I would say
it gave me 106,000. Right? Like that's my margin available, so I didn't really have to put any money in.
How much is in your TFS, say, ballpark numbers?
With Wealthsimple, I have 164,000.
Okay.
I'm 33,000 in my TFSA.
Okay. So it's doing okay. So it's essentially almost taking your entire TFSA as collateral and giving you that borrowing power.
Yeah.
Okay. Yeah, that makes sense. I'm
I
surprised
love
they
it. You
didn't do a
can
one-to-one
click
match.
on your phone on the mobile app on your margin area, and it
Mm-hmm.
comes up in green. It says your margin health is good.
As it should be, right?
It's kind of like playing a video game. So if your margin health starts to go down a little bit, does it turn yellow? And then if it gets really bad, it turns red.
Basically, yellow. Yeah, I would say yeah. Yellow
Yeah.
is you're basically hitting very close
Yeah.
to that $0 position, and then once you're a negative, then it goes red, which means
Yeah.
that well, you gotta do something about that.
Yeah. We don't want to see that. That's the whole point. We're trying to avoid that. So far, I feel really comfortable with what I bought. Because if you guys have followed the market in the last month with everything going crazy, up and down, Utes is almost like a straight line. Like literally,
Yeah.
it'll go up 4 cents one day, down 4 cents the next day. But it's really flat, which is, I think that's what we want, right?
Exactly. If you want a defensive position that you can store cash away and pull it out during any sort of dip days, that's kind of exactly what you want, right? You can kind of sort of it as an alternative to not quite a fixed income position, but it's almost behaving like a fixed income alternative, whereas you want that sort of flat price movement, but still get the interest, or in this case, distribution collected that you can take and pull out or use wherever you want to do. So you can kind of treat that. Basically, having Utes out for over a year now, you can kind of treat it as a safe defensive position. At least that's how I see it, really.
Yeah.
I don't know if you guys want to add anything on that, but yeah.
No, I agree. And it's paying a 17.5% yield, right? And then the margin interest is about 4.5%. So it's like a 13% positive.
It's 4.45% for you, right, Paul?
Yeah.
Okay. Now that's a pretty good rate. I don't know whether that would change again recently, but I'm assuming it will probably stay at that overnight rate until the end of the year.
Yeah.
Something around that sorts.
Well, I was looking at maybe buying something else or buying a little more. That was just like, it's the ex-dividend date. Give it till tomorrow or maybe Monday. Everything will start going down in price again.
Yeah.
And then I'll probably
That's about expected,
put
right?
Yeah, exactly. Then I'll probably put another. I'll probably buy another $1,000 worth of some more just defensive positions right now. Not looking for anything aggressive. Well, I'm still feeling this out.
What?
No.
Okay, so now that you mentioned aggressive and defensive, Shawn, what in your opinion is either or? Like what how do you stand on that aggressive versus defensive scale?
Like aggressive for me, high yield like MSTE, obviously, maybe TSLY.
Okay.
Defensive, anything that is bank, obviously bank is a good one. Anything that's utilities, oil, banks, for me, all defensive positions. Because even if you look back to when the last big drop in 2021, there wasn't a big movement on all of them, right? So just, I guess, being new to the margin thing, I'm just looking for more defensive positions and something steady. Something steady, doesn't have big jumps in price up or down.
And for that 30% margin requirement.
Yeah, that's very important.
I don't think I'm ready to hit the 50% ones yet.
Chris in the WhatsApp group was saying that he had a lot of positions. He actually opened a margin account too. I don't know if you guys have been following, and he has also the ENCL, the Utes, the bank, but then he also has C-Day and S-Day in there, which by C-Day, S-Day, and I think he has something else in there also at 50%, but we'll just take C-Day and S-Day. And so, I think he has Biggie in there. Maybe.
I was just going to say that. I think it's Biggie is what he mentioned.
Yeah. So I think, he has HHIS as well, which is also at 30%, but Biggie, S-Day, and C-Day are all at that 50% position. And assuming that, because Wealth Simple, let's just look at the track record of, because HHIS has been out about just over a year now.
He has HHIS as well.
Yeah, just looking at the track record over how long HHIS took for Wealthsimple to decrease that margin requirement, which is they actually decreased that margin requirement like I think about a month and a half ago, which is roughly about 10 months prior to being listed on Wealthsimple. And so Biggie has only been out about 2 months. So if it's anything like HHIS, although typically speaking, I wouldn't be surprised that Biggie might take a bit longer for it to go down to that 30% margin requirement because of the fact that its inherent leverage, its borrowing cost is actually higher.
I got to grab a charger, guys. Give me a sec. Keep going.
Okay, sure. So because I believe, because Biggie is borrowing up to 33%, and it's a bit more technically concentrated. So it only has 10 stock positions, which are all more aggressive and growth oriented, whereas HHIS has 19. And 5 of them are more defensive. And so, plus the fact that if you look at the day-to-day movements factoring in that Biggie is hedged to Canadian dollar, whereas HHIS isn't. And so from a day-to-day movement perspective, if you track the price movement between Biggie and HHIS, Biggie technically moves more. And so I'm thinking Biggie with the track record of how long Wealthsim usually takes for a stock to basically downgrade from 50% to 30% margin requirement, it might also take roughly anywhere between 6 to 12 months. So I would say that's probably how long that would take. And I would say the same thing for C Day and S Day and Q Day. Although I'm not sure whether Q Day would technically go down because it's very tech concentrated. So Q Day might actually stay in that 50% margin requirement much longer, just because of how more sector concentrated it actually is. Whereas C Day and S Day, I would see it as they would basically go down to that 30% margin requirement faster. Assuming all factors are weighted to scale, then C Day and S Day would basically get promoted to that 30% margin requirement faster technically than Biggie, since it's also been out longer. But for now, it's still at that 50%. Are you guys thinking whether you guys would want to add those positions, any of the DayMax ETFs from Hamilton?
I think so.
How about you, Paul?
Yeah, I think so. I think I would. JJ, when you did, you had your margin account last year, right?
Yeah. So during beta, so since November.
So do you? Well, that wasn't very long, was it? Do you know?
I mean, that's when they offered it. But I mean, it's about a year, yeah.
No, but you. Yeah, no, but I mean, I'm talking about for a tax year. Like if you got it in November, you only had it for a couple of months in 2024.
Right.
Because if you looked into whether or not you can write off the interest in your margin account, now, can you write off the interest if you hold U.S. equities, or do they have to be Canadian?
That's a good question. But sorry, what were you going to say?
I was under the impression that you had to borrow money invested in Canadian equities in order for the government to let you write off the interest. Because if you can write off the interest, that, like, you know what I mean? That makes it a double bonus, right? You're making money from your margin account and you get to write off the interest as well.
That's a good question. I haven't looked into borrowing against U.S. equities because this is the first time I did it, since even prior to that, everything was second Canadian listed, which means that all the interest that you can take. Well, keep in mind that if you want to write off, if it's a tax deductible event, then technically speaking, you need to keep everything in that account. Say, for example, you can't, because right now with a margin account, you can technically withdraw into another account and fund that account. But if you do that, you're basically taking it out of that borrowing status and using it as income. So that portion that you're taking out of that account and using it for other purposes, then that portion you're withdrawing, you cannot write off that portion because you're using it for other purposes. But as long as you keep it inside that account and that's all used towards borrowing new securities, then you can write off those portions on eligible Canadian listed holdings. So in terms of USD holdings, that is a good question that I'll have to look into. But yeah, I don't have an answer right now, but that is a good question though.
I think I'm going to
Yeah.
sit down with my accountant one of these days. I got to send him an email and find out if he's available because I want to know some of these things. Make sure, we're claiming the income properly and all that. Because I think
Hmm.
the money you're making in your non-registered account, obviously it qualifies as income. You have to
Yeah.
pay taxes on it as well, right?
Well, not as income, as like capital.
What about the distributions?
Yeah, still as capital.
Yeah.
Well,
Wouldn't it be eligible dividends?
I'm saying, for example, when you tax it as income, then it would be 100% taxable at your marginal tax rate. But if you
Right.
qualify it as either a capital, as a capital gain or loss, or as a dividend, technically, then it is more tax favorable. So that's
Sure.
just
Yeah.
as a different technically as a different tax treatment. But
Sure.
technically, yes, you are taxed. Well, technically, at your marginal tax rate is just the amount of coverage of what you're being taxed on differs, whether it's as a eligible dividend or capital gain. So, yeah. But technically speaking, they're all taxable in that tax year event.
I'll let H&R Block worry about it.
Right? So, JJ, you made some big moves in your margin account recently, didn't you?
I did.
Yeah? Selling off some stuff, buying some new things?
Yeah, part of the reason was that the original perspective of holding a bunch of the yield. So I'll just give a little teaser. So I had made a huge Blossom post about, I think over a week ago, did saying that I basically rebalanced a couple of holdings in my margin account with regards to my US dollar holdings. So specifically for YieldMax and Roundhill. And so part of the reason was I no longer really wanted to worry, because right now with my margin account, part of it is in USD and the vast majority is in Canadian. And so looking at the total return breakdown, the fact that when you have that borrowing in US dollars, it is 3% more in USD versus what you can borrow in Canadian. And so having that 3% extra that of interest that you're paying for, but not necessarily getting better total returns wise.
Right.
Because keep in mind that most of the USD holdings, well, that could change with new releases that may have leverage in their products. But as of the current moment of what is being offered by Roundhill, for the weekly payers, but they're zero DTE products, and YieldMax's basket. So we're talking about specifically YMAX, so YMAX, which is the fund of fund from YieldMax. So with those positions, based on the fact that the original thought process when I first opened those positions and kept DCAing was, if the NAV had stayed flat and you're able to capitalize on all of those distributions you collect and rebalance and basically add more to that pool, and even factoring in that 3% difference, you technically could be making more on those US dollar holdings. You guys keeping track with that?
Yep.
And so that was the original thought process, but having looked through it total returns wise in throughout the whole year, I was not that impressed with what basically their inherent strategy. And so paying that 3% extra, having to worry about currency conversion. Now, Shawn, Paul, you brought up a good point that whether or not those interest that you collect on those US dollar holdings, whether they could be written off tax-wise, because that's also was part of the plan of, if it didn't make any sense to write it off as a tax deductible option, then basically I'll be paying more taxes than technically I need to. And so from a tax perspective, and from a gains perspective, and from a total returns perspective, net of the interest that I am paying, it probably didn't make any sense to keep holding it long term, having such a huge pool in USD. Plus the fact that in non-registered accounts specifically, if you cross that $100,000 foreign investment threshold, you need to be filing taxes with IRS. because it counts
Oh,
as U.S. estate
geez.
taxes. Yeah,
Oh,
you
wow.
keep in mind that $100,000 threshold. And so I was sitting basically at that threshold. I'm just like, because every time you get more distribution collected, you technically that threshold goes up
Right.
Yeah.
over time. And so looking at that, I do not want to have to deal with filing extra taxes that I need to.
No.
It's just more headache because right now I am filing everything myself, so I already have enough headaches to worry about without having to deal with foreign estate taxes.
Yeah.
So I'm
Yeah.
just like, okay, going through all of this, I basically took Roundhill technically was a capital gain, factoring all those distributions collected. And so, but YieldMax's YMax is a completely different story. And we all know YieldMax's strategy. Don't really have to go through it again because not very satisfied with their overall
No.
coverage ratio, with the overall aggressiveness of their calls, and the fact that they cannot pick and choose their best performers in their basket. With their
Right.
current prospectus, they hold everything. Well, guess what?
Mhm.
50% of what they hold are garbage.
It's crap.
It has never recovered properly. And so
Yeah.
even looking at that 1-year track record, if you had reinvested everything, technically it is keeping pace with if you had just held SPY or even SPYI or any other S&P 500, one of those ETFs, whether it has a covered
Yeah.
call or non-covered call. You could be holding any of those, and you'd have been better off just holding those with that peace of mind and not having to reinvest everything that you couldn't even use anyways. And so if you had used any of those distributions you had collected from YMax, then from a total perspective, you would either be basically performing the same or less. And so even now factoring in that because it is also in a non-registered account, you also have that 15% withholding tax that you could technically write off in your margin account, but you're still subtracting 50% from every distribution you collect. And so with all of those factors, I was just like, you know what? I'm just going to take what I had collected, and technically overall it is a capital loss, but I am completely fine with the fact that because now I took that capital loss and I can basically claim it against all the capital gains I've received throughout the year. So I took it as a strategic rebalancing to get rid of a huge portion of the margin allocation I had with USD. Because keeping in mind that everything that I had in USD, because when you have both USD and Canadian accounts in margin, so those two different currencies, you don't need to convert your Canadian holdings into USD. So you can have it sitting as Canadian, but then borrowing directly from Wealthsimple. So the amount you have in that account, you can keep it as Canadian dollars. Whereas if you want to borrow anything against you in USD, you would be basically borrowing against Wealthsimple while bypassing or skipping that 1.5% conversion fee. And so everything that I had in USD was technically borrowed with Wealthsimple. So I was just like, you know what? I'm going to get rid of a huge portion of my USD holdings. I'm going to stick with Canadian because for long term, because of the fact that all of the Canadian holdings with that 25% leverage, and the fact that all of that is technically more tax favorable anyways for us Canadian investors.
Yeah.
Well, technically it's a win-win position. So I kept it for basically a year now. I've done my case study. And so with a 1-year case study, I'm satisfied with what I've collected so far with Roundhill. I'm fine with collecting that capital gain. Yeah, technically it is a capital gain from the difference. So keep in mind that all the distributions collected from Roundhill, they are technically as foreign income, but that difference in price wise between what I've collected and what I've sold it as, then it is technically a capital gain. So I'm completely fine with taking that minor capital gain-ish and then basically negating it against the capital loss that I received from YieldMax. And so moving forward, with my main margin account, I'm going to keep the vast majority, maybe 1%, because I still have the YMAG position that I'm going to keep as is for now. I might even sell it. Well, I'll see like moving forward what I want to do with that. But moving forward, I want to keep basically most of it, if not like basically 95% in Canadian, just because it's more tax favorable anyways.
Mhm.
And that because I
Yeah.
am in a relatively high tax bracket. So I'm just like, you know what? I'd rather pay less taxes than I have to.
Yeah, for sure, right?
And then
For
if I
sure.
wanted to, because I'm also thinking thinking forward, but I don't want to limit myself knowledge wise with what's being offered USD. So what I'm gonna do is, because I also have my partner's TFSA kept separately. So, and I have their account also linked on margin that I haven't started using yet. I might have their margin account as a separate case study and what can be possible in USD holdings. So that could be a separate case study just for YouTube purposes.
Yeah.
So maybe $10,000 worth of whatever I want to pick. So stay tuned for that. I'm still figuring out because that will be a separate YouTube series. But for my main margin account, most of it would be Canadian. So long
Do you hold any US listed ETFs in your RSP, or
I
is it
do.
all Canadian?
Yeah.
Yeah, me too.
I'm thinking because I haven't contributed new money in the last 6 months. So everything was technically already in USD. But once I add, because I actually have a lot of RSP contribution room that I can add before year end that I can basically deduct. So if I add new money, I would probably just leave everything in Canadian. So everything I had previously that was already in USD, then I kept it in USD. So you have the WPay, you have WPay, you have I'm losing my train of thought here. I still have a little bit of portion. I have blocks. I have blocks. The vast majority, I would say the biggest portion right now is in TDAC because why not?
I like
Because
TDAC. Yeah.
TDAC is great. Yeah.
Yeah. I'm buying
So
a
I have
weekly
that.
now.
Yeah.
I've been
But
slacking on that one, so now I got to catch up. Yeah.
But because of the fact that when I add new money, with the RSP, I'm not looking at it that often. So I'll probably just moving forward, would probably just not even play with these cover call ETFs moving forward, just for me, for my purposes, because I can't even pull it out anyways until I'm like 60. So I still have such a huge length of period that I will probably, the vast majority when I add new money, I would actually add QQQL. So I don't know if you guys are familiar with QQQL.
No.
So
No.
take the Invesco QQC, add 25% leverage, no covered calls, and that. So it's just that 25% leverage on QQQ, no covered calls. So long term, it should perform very well.
Yeah.
Maybe not 1.25 times QQQ because you would be going down more
Right.
during those market dip days than regular QQQ. But long term, it might not perform 25% more than QQQ, but it could perform 15% more or 20% more because you have leverage costs that you need to factor into the total return that would basically decrease a little bit, but theoretically speaking, very long term. So we need to say 5 years or more if you want to do any of these positions. So if you have a very long track record, then it could be a very good position to add. So yeah.
So overall, JJ, what do you think? Did Shawn and I go in a little too slow, a little too cautious,
a little too slow for my taste? But that's just me.
Yeah.
Yeah, I'm surprised with myself.
$100 only? I'm surprised on the amount of money you guys bought.
Well, you know what? I thought I'll start with a couple positions, right? And then every week I'll look and see which one's down a little bit and just throw in another 500 and another 500. And, 10, 15, 20 weeks from now, all of a sudden it's going to be like 10 grand. You know what I mean?
Mm-hmm.
Instead of, and with my luck, JJ, I'll put in $10,000 and 2 weeks from now, Utes will drop $1. So, I'd rather buy it a little bit at a time. And, if I can dollar cost average down, then why not?
No, that's a good position. So right now, do you only have two? So you only have HDIV and Utes,
yeah,
right?
I just have the two, but next week I'll buy and I'll buy again.
Okay. What are you thinking of buying next?
That's a good question. I might get BMAX. I might get ENCL. Um,
More
HYL.
defensive?
Yeah, this is gonna be all defensive, JJ.
Okay.
It's gonna be all defensive. I think for Shawn and I, until we've been doing this for like maybe 3 to 6 months, and we could see that it's actually working.
Absolutely.
You know what I mean? See that our margin accounts are growing. We're paying off the interest. You know what I mean? We're building up more equity than we just borrowed. And I got to figure out how this works before I'll get a little bit more aggressive. I was interested
That
though
makes sense.
when you said HHIS has 30% margin. I thought it was 50% margin requirement, but it's only
It was at
30.
the beginning. Yeah.
Yeah. So you never know. Maybe in a few months I might throw in something like that. Yeah, but it's going to be pretty conservative. Did you guys watch the interview that Darren did with Robin Haney? His margin account
No.
has things like VFV in it and VDY.
Mm-hmm.
Like he's really, really conservative with it.
Wow.
Well,
I didn't even.
the only thing with if you buy, the thing is when you buy non-distribution, like monthly distribution paying ETFs, then you need to be more. Then either you need to be more conservative, that the amount of borrowing that you're taking on, you need to be way lower. So you would need to basically use way less than what you'd be comfortable with, or or you need to babysit a bit more because you
Yeah.
don't have those monthly distributions that you can pay off the borrowing cost. So that borrowing cost will technically accumulate every single month, which will eat into your buying power.
I think he
You
did
still am
buy.
following with this? Yeah.
I think he did buy something like HDIV and maybe HYLD, which kind of like covers the interest costs.
Okay.
Right?
I
guess
haven't looked at the interview yet, but I did see,
Yeah.
I did see on my For You page. So I might
Yeah.
look. I'm gonna take my.
I just thought it was interesting. I never thought about putting growth stocks or anything like
You
that
could do that, of course. Yeah.
in my margin account, but maybe it's an
That's
idea
what
for
I
down the
actually
road.
had. I don't know if you ever, for my first conversation with Leon, I did mention that when I was with IBKR at the beginning, when because technically they had the best borrowing rates, but because of the fact that they can always change the margin requirement, so I was pretty conservative. I didn't go any of the EQT positions, but I had a 15% allocation in ZSP. So technically the same thing as VFE. So
Yeah.
I had that, which performed just fine. But then over time in 2023, in later 2023, when Global X released their income suite, so that completely switched over to bank and USCL. And so I had that for a while, and that completely changed once Wealthsimple released their margin accounts at the end of 2024. So you can completely go with that route, because I mean, when it comes to margin accounts, every investor has a different risk tolerance. So because I think Robin, he's definitely more growth oriented versus having that income portion. Maybe let's just say, for example, I think his overall portfolio, he's about 90 or growth oriented and maybe 20% dabbling in income ETFs, which I mean, with taking on that, he probably has the same allocation in his margin account, which is completely fine. So I would say when you don't have those, when you don't have monthly distributions, because interest accrues every month. So, and VFV, if I'm not mistaken, it's either semi-annually or annually. They don't pay that often.
Right. Do they pay quarterly? I think they might pay
VFV is.
I think it might be quarterly, but it's very like 1%.
Oh, maybe. Okay.
It's almost nothing.
Because I know VEQT, which is the all-in-one equity, that pays once a year.
Really, eh?
Yeah.
Shawn, is that what you're saying?
I might be wrong, but from the last I checked, yeah. But yeah. So if you have, that could be a problem with borrowing in regular growth oriented ETFs that don't pay much, which means that you need to babysit your account way more often because you don't have those distributions to offset that interest. Once you have those interests accumulating every month, that will basically elevate the amount that you're borrowing every single month. So you need to either be more conservative in how much you want to borrow and allocate, or you need to look at it way more often. And so one main advantage of having those growth-oriented ETFs in your margin account is that on up days, you will unlock more borrowing power, technically. So you can be buying other stuff on sale if you want to.
Right.
So, I mean, everybody has a different risk tolerance, right? So, yeah.
Sure. Sure.
Yep. Sorry, Paul, were you asking about the FEQT, how often it pays?
Yeah.
It's
Didn't you
once a
say
year,
it
right?
pays? Didn't you? It's a
Yeah,
year.
I think the ex-dividend date's in like another 40 days, 39 days.
Ooh, you gotta get your hands on that, right?
Well, I don't know, JJ, if you know it, like Paul and I are doing Paul's buying
I did mention
XEQT and I'm
I actually wanted to add I wanted to contribute myself to your case study.
Yeah.
Yeah.
oh
Are you
yeah?
gonna? Which one do you want to buy?
I'm actually gonna do it because I'm thinking of adding it to my FHSA. So I will be trimming a portion of my FHSA to add that. But I'm thinking about the Horizons one, the Global X one.
Which one is that?
HEQT. Well, actually, I wanted to see whether because HEQT I think they pay monthly, if I
Yeah.
remember correctly. Global X usually pays monthly. So you have HEQT, and which is you can kind of think of it. Wait, so Paul, you have XEQT, right?
I do. Yeah.
That's about 80. That's about 8,500 stocks, and that U.S. allocation is total U.S. market. Whereas Fidelity is more active. So does FEQT have around 4,000 stocks? Somewhere around there, right? 4,000 to 5,000
Yeah, it's right around
stocks.
that number. Yeah.
Okay. Yeah. So I was thinking, okay, so you have Fidelity, which is a bit more active, and then you have BlackRock, which is completely passive. And then you have Global X sitting somewhere in the middle between passive and active. And so I'll probably add HEQT to my portfolio. And then I would also add HEQL in there as well, which is a 25% version of HEQT.
Right. It's the leverage version.
Mhm.
Cool.
So have a equal allocation. So if you guys are buying $100 every month, I would basically contribute $200. Sorry, $100 every week. I'll contribute $200 every week. $100 in HQT, $100 in HQL, and report on a weekly basis.
So
What do you
we
guys think?
did. We put 250 to start
Okay.
a couple weeks ago, and then
Okay.
every Monday we put $50. So right now we're at 350.
350, yeah?
Yeah.
Yeah.
Okay.
So
Yeah, we
we're
set
doing
up those
50.
simple auto purchase for us.
Yeah, just a recurring buy every Monday. So that's 200
Yeah.
a month. I figured, look, if I do that for the next 20 years when I'm 72.
That's a little low, $200 every month.
Yeah. I guess we could increase it, but remember we have to buy our other ETFs as well.
True.
Yeah, it is just a case study for us, right? Us being income investors, it's getting my 0.77% distribution every year.
That's fair.
I'm not going to retire anytime soon on it.
That's for sure. But
Yeah.
I'm trying to, because I'm kind of somewhere in that hybrid zone. So I'm just like, maybe I should add more to my growth allocation.
Even if you did $100 a week or whatever, right? You could still look at how much percentage-wise yours goes up compared to ours.
True. That'll work.
Right? So yeah, even if we have different amounts going in, as long as I think it's maybe consistent that you buy every week like we are.
Mm-hmm. Do you know what time you guys are? Well, I guess what time Wealthsimple makes that purchase for you?
It'd be like
as soon as market opens, or what?
Yeah, I think so.
Yeah,
I think it's pretty
9:30
close.
first thing in the morning.
That might not be the best price, especially normally when it comes to markets. When you buy on Monday or Friday, you're not taking the best price in because it might be factoring in overnight or over weekend movements into that price, especially when you're buying at open. So if you want to capture the best average price, I would either do Monday around noon or even pick another day during that week.
I wonder if you can pick the time. I know like you can set up a recurring buy by day, but I don't know if you can do it by time. We could always switch it to a different day.
I would probably do Tuesday or Wednesday instead if you want to capture the best average price over time. Yeah.
I mean, XEQT doesn't swing too much. You know what I mean? Like the share price goes up a little, down a little, mostly goes up.
That's fair.
Yeah.
Yeah, I'm looking at FEQT. It was 9-cent swing today. That was it. So it's not.
Did you catch the low?
That would be cheating, Paul. It's not Monday.
Save your 9 cents. Boy, that's too funny.
On my $50. Yeah, that would be great.
That's hilarious.
Well, actually, I was going to say earlier, JJ, that Paul and I were texting each other on the weekend. And I said to him, okay, that's it. I'm going to go 2 feet right into the deep end of the pool. I'm going to put $5,000 into my margin account. And Paul talked me off the ledge and said, maybe you better start with 500. So me not going 2 feet deep into the deep end is Paul's fault.
Yeah, but you
shouldn't have reeled him back in. This would have been funnier.
Yeah, but right after he told me he was going to put the 5,000, and then he texted me and said, "I'm a little nervous about it."
What were you even thinking of buying with that initial $5,000?
All
with you,
Oh my god!
and
Okay.
GME.
Yeah, put it in GME.
Well, actually, you know what? If I hadn't put it in GME, we're up like 5% this week.
There you go.
Take that.
Well,
take
maybe
that.
not.
Take that swing trade.
Yeah.
Yeah.
Take your profit.
Do some day trading out of that account.
Exactly.
Hey, JJ,
Honestly, I probably would have done HDIV, bank, UTES,
Okay.
HHIS, and that probably would have been
What about
what I would have. Probably not.
Do you know what that is?
not.
Is that the leverage one? Is it 2x
leverage,
or
yeah.
3x?
Triple X. 3x. 3x daily leverage reset. Yeah.
Smart. Yeah, I'm going to put my whole
Yeah.
margin account in that. After the market crashes. You got to wait till the market crashes and then buy
That's the
it,
point. Yeah.
right?
Because I think Gary started adding to TQQQ as part of his portfolio, but he only does that after every market dip. I'm just like, okay, I guess we'll see how that goes.
Like Paul and
What
I
do
were
you guys-
saying, my margin account is all, things that don't go up and
Too
down,
boring.
like defensive
Yeah.
positions. Yeah. Until I get
okay
a
with
lot
that.
more comfortable with it, get 4 or 5 months in of dividends coming in or distributions coming in to see how it rolls. And then I'll probably get too brave and
Yeah, and then
jump
lose it
in
all?
large. Never,
Oh,
never.
boy.
No.
Baby steps.
if I lost it
That's
all-
the logical way to do it.
Exactly.
But then on
exactly.
on YouTube, that doesn't attract enough attention, right? If you're going to
No,
baby
it
steps.
doesn't. It
It's
doesn't.
everything now.
Well, that's it. Tomorrow morning, I'm putting 44 in.
Yeah, you do that.
It gets to my
It
$5,000.
could be
That's
that.
it. I'm
could
doing
be,
it.
Do you remember the guy, what was his name, Kamar or something? He had everything on margin. And I remember, do you guys ever watch his channel?
No.
Not familiar.
No, there was a guy in the States who was always talking about buying like Misty and Coney and, all these different funds, but all on margin. And he was
Okay.
making like 10 grand a month, 12 grand a month.
Did he
once
pull out,
gets-
or does he still have it?
Well, I think what happened was, no, I think he still has it, but I think what happened was, when Misty crashed and Coney crashed and Nvidia crashed and they Alti crashed, he got margin called like week
Left and
after
right,
week.
right?
Yeah. And basically, I think his YouTube channel just disappeared.
I wonder why.
Yeah. Yeah. I wonder why.
I wonder if he made. I wonder if he earned anything from that, or is he paying? Boy, I don't even want to
Yeah.
imagine.
He was doing well for a while, right? Because, those funds paid a lot of money for a while, but then, the fact that he borrowed money to buy them all and they all crashed. Yeah. I think he got burned pretty bad.
That's fair. That's fair.
Yeah, that's what I want to avoid. I don't mind, if we make a little bit of money from the margin account, and it even seems like it's not that bad, right? If Utes is paying, what did I say, 17.5%,
yeah.
right? And they're charging us 4.45 in interest, like that's a good spread, right? You're not talking about 1 or 2%. That's like over 10% spread. So I'll take that, and not risk losing everything. HDIV is a little bit more conservative, right? I think HDIV is around maybe 10% a dividend.
It's like 9.5 now.
Yeah, so that's a little bit more conservative, but we'll mix it in.
It can't hurt.
I know, JJ, I know how Shawn feels about MSTE, but how do you feel about it right now and all the people that are panic selling it?
Bunch of crybabies, if I'm being honest.
Boy. That's what I wanted to hear from you.
Yeah. Now the video got spicy.
Oh
Yes,
yeah. I mean, we need a little bit of spice, right?
We're going to put that in the title. Crybabies sell MSTE. Nah.
I mean,
I
the
bought
thing
more.
is,
But it doesn't make sense to me because most people probably bought it around somewhere between $12 and $16.
I mean, people who bought into strategy, why did you buy in the first place? What did you expect with a single stock that's
ETF
leveraged against
that
Bitcoin.
holds Bitcoin.
And Bitcoin is undergoing a minor crypto winter. I mean, you gotta expect it, right?
Yeah.
If you're buying a leveraged version of Bitcoin, and then you also have leverage on that with some cover calls that might or may not offset it, and then you have distributions which will fluff based on the underlying NAV price. Well, what did you expect? I'm not being like non-sympathetic, but like you kind of had to expect stuff to happen. Like if you're, let's say for example that even if you're going like cover calls with leverage on QQCL, which is about, I think the total return in the past year based on the bull market is somewhere around that 20%, 20 to 25% range, give or take. Well, if you were attracted by the distribution on a single stock, well, it goes both ways. It can't just go up. If you know what I'm saying? Like, if that were the case, you could be a millionaire technically within 10 years if you were expecting a 40 to 50% total return or total performance every single year. Well, guess what? It doesn't happen that way. Sorry to burst your bubble. You can't fast track your way to, I don't know, millionaire status. So, sorry, not sorry.
I mean, I'm not happy about it. I don't like to see the distributions being cut that much.
And
but
I don't know, like,
it is.
I don't know,
it is.
like, were people buying this stuff on margin?
Not
they
that
were,
I know
right?
Of. Not that I know of.
I'm pretty sure people bound to happen. I'm pretty sure it's bound to happen.
I think Christopher in our group, Blossom group, he shared a screenshot of a girl who posted on Blossom where she had bought, I think, MSTE and
I looked in that post,
on margin, right?
It was, I think it was not just that. It was MSTE. It was Coney. Was Coney in there? Maybe. I'm not sure 100%. But
I'm
MSTY, MST, the USD version was in there as well. And then you had Alti. Actually, let me just check that original post. I looked into it during that weekend.
At under $6 a share, paying the dividend or the distribution that it is still, it's tempting.
Yeah.
It really is tempting.
I wonder if next month, though, they're going to cut it again.
Okay, yeah, I have that list. Okay, I was right. It was basically so she had four different positions from the last time I checked, and basically in equal weighted position. So we have some other, I think, growth oriented stock. I'm not too familiar with it, so we won't mention it. But basically she has a 3-way split between MSTE, MSTY, and Alti.
Oh, geez.
And they're all down basically 60%.
All right. Well, none of this video is financial advice. We're not financial advisors, but I would highly recommend not doing that.
In the workings.
I would highly recommend not putting all your margin into the highest, riskiest ETFs you can find.
I would say don't even touch margin until you've grasped the basics of investing. Long term, not swing or day trading. You're gonna get burned with that. And plus, you can get burned very easily using your own money. But then if you're using someone else's money,
you have to.
It's a double-edged sword.
More careful.
Per se.
I feel bad. I feel bad.
Yeah. That's a bitter pill to swallow. My gosh.
Yeah, for sure.
But then like again, I would say. Sean, what were you gonna say?
I was gonna say, like, talk about being enchanted by a high distribution number. It's just wow.
Yeah,
crazy.
But I guess if you're a bit more optimistic in the matter, it's better that they learn a lesson now earlier on, because money comes and goes. You can always make more tomorrow. But then the education and the fact that you went through that mistake, and if you can learn from it earlier on, it's way better than learning about it way later on. And so that is a good outcome knowledge-wise if the loss wasn't like irrecoverable per se.
And hopefully the person was young enough, right, that they can bounce back from that.
if they were near retirement age, then that would be a different story. But let's just take, for example, if they were in their like middle age, 30s, maybe not more than 40 years old, hopefully, because
Yeah.
that could be a different scenario. But if the loss that they were forced to sell, I don't know what happened with that post, because I think that was about 3 days ago. She did mention that she was in a $2,000 margin call.
Oh boy.
So yeah, everything was down 60%, and then she was also. So I think from that last screenshot, she was overall was down around $20,000, and then she was also margin called $2,000.
Oh wow.
Yeah.
Yeah, that's not good.
No,
Not good. Well, that's definitely not our plan.
no, it's not my plan.
By all means, it could be a very interesting case study if you were.
No.
Oh
No.
yeah, absolutely.
You were
All you need to
probably get like 20,000 views overnight.
And I got my laptop back today. It cost me $250 to fix. Well, not my
what
laptop.
happened?
I broke my stepson's laptop. I made so many videos. The guy told me it was just regular wear and tear. When you open and close your laptop, I guess it's got hinges, right? And the more often you open and close it, well,
you don't have a desktop?
I don't. And I told my wife I want to get a
Shockers.
desktop. I told her I want a desktop. She's like, no, nobody uses desktops anymore. And I'm like, yes, we do.
Excuse me?
Yeah. So I don't know. She'll probably buy me one for Christmas. Who knows? That's probably why she doesn't want me to buy one.
I mean, basically, you would, if you were being, I mean, technically you are self-employed in the YouTube game per se, which means that you can write off, if I remember this correctly, let's say, for example, your laptop, that if you're buying a new, or even desktop or a new complete setup, and that's around $2,000 to $3,000, because it is a capital allocation, which means that you can't write off the entire value in that first year, because that wouldn't fly with the CRA, even if it was a complete loss. But you can write off, let's say, for example, a third of the cost, like your average, a third or a fourth of the cost, depending the total cost of your complete setup, and you can write that off. So that will basically be depreciated over a 4-year period. So you can do something like that. Yeah. So even even if you were to buy a phone, you would be averagely, say for example, you would be using that phone for business purposes for 3 to 4 years, you would be doing the same thing. So if the total purchase cost of a phone nowadays, if you're doing a really nice phone, maybe it's around that $1,200 price point, then you were able to write off a third or fourth of the cost in the first year, then a third or the fourth of the cost in that second year, so on and so forth. So everything, you're always going to be paying less taxes especially going down that self-employment route. So
yeah, exactly. Yeah. That's why I'm going to sit down with the accountant and find out exactly what I need to do.
You don't file your own taxes?
I have for the last 2 years. I did. Well, have you used Simple
for 3 years now?
Yeah, it's got its own tax thing, right? Yeah, it's amazing. But I think this year I just want to ask him a few more questions, because now I'm doing so many more things. I got like revenue coming from YouTube. I got. Did
you start earning revenue from YouTube? From the last I've heard from your PII Pioneers podcast, you never received that. What was it that
we got the letter when we came back from our cruise? Yeah, we came back from the cruise. I checked the mailbox and we got the letter with the code. So we finally got that done, and yeah, that's good. Did you sign
a WE Ben form though?
What is that?
So
Shawn, did you sign one?
No, I actually have.
I don't know if it's a WA Ben form per se when it comes to YouTube revenue, but because remember YouTube is a U.S. company, which means that you're not a U.S. citizen, which means that the IRS would be withholding every month part of your YouTube revenue if you don't sign that declaration form.
Yeah.
Okay.
I've signed one because I have shares in Computershare in the States. So every year I have to sign one.
So yeah, if you sign that, then then the IRS would not be withholding part of your YouTube revenue. But if you don't, they will be withholding. I talked to Candace about that because she also signed the same form. She mentioned that if you don't sign that form, they could be withholding up to 30% of your YouTube revenue. So
you have to sign the form with YouTube?
Yeah,
that's a good question. I think so. Yeah, I think they're supposed to give you one.
Okay.
Yeah,
I'll have
you
to-
need to look. You need to look into your YouTube Creator Studio. I think it's somewhere in there.
Yeah. All right. I'll try to figure it out. What's it called?
I think it's a W8. It might be a W8 bend form. It might be named
Yeah.
something else. But
Yeah.
start with that.
All right, guys. Well, it's getting late. I know Sean's got to get up early and go to work tomorrow.
This week is the worst week
said-
for me every year at work.
Oh no, it's inventory.
Inventory week, yeah, it's a
boy.
killer. Tons of hours. I'm going to be at work on Friday night till about midnight, and then I'll be back at work on Saturday about 5 a.m. And it's a killer.
How can they expect you to work till midnight and come back 5 hours later?
Well, when you're paid on when the majority of your pay is done on how much your department makes every year, you put in the hours.
Yeah, I guess so.
You know, and in all reality, it's 1 week a year where I have to put in a ton of hours. But you know what, the year end T4 slip looks amazing, so
Yeah.
I'll keep doing it.
You get a year-end bonus then?
I do get a year end bonus, but I get a monthly bonus as well for
Oh,
you know,
sick.
yeah.
Yeah.
So it's fantastic. We get a monthly bonus check, which is added to our regular paycheck, and then the other paycheck we call our poverty paycheck, which is just our salary.
with no bonus.
No bonus. Oh, it's so sad.
Yeah.
But no, I can't complain. My company treats me really well. They pay me really well, and you know, it allows me to vacation a lot, enjoy. You know, I don't know if Paul and I have ever mentioned this, but I have an addiction to barbecued beef.
Ooh, sick. Okay.
Oh yeah, my backyard. I have this giant smoker in my backyard and a gas
Whoa.
barbecue and a charcoal
Wow.
barbecue, and I use them all.
Am I invited at one point?
What's that?
You're in Montreal, right?
I
Yeah, you
come.
can come down.
I come to Toronto every so often because my parents
Oh,
are
yeah?
in Vaughan.
Are they really?
Oh,
Yeah.
Okay.
Well, if you ever do, let us know. We should all get together.
Yeah,
Sounds
for
good.
sure. Yeah.
I
Did
don't.
you guys
I don't know.
ever go?
I'm in
Did you guys ever
Grimsby.
go down for that wings this week? Was that supposed to
Oh,
be a
we
thing?
did.
We did.
We did it
Yeah,
last
yeah.
week, and we're going tomorrow.
That's right. We went last week and we're going tomorrow. Yeah.
Fun
Yeah.
times.
Yeah. Maybe
You know what? You know what? I used to live across the street from Paul for many years, and now you know what? I changed jobs, so I've moved whatever about 100 not 100, 70 kilometers from Paul. So
Oh,
every other week we
okay.
get together for a beer and we talk and get to see each other. It's a good way to
Yeah.
keep in contact with your friends.
You
Yeah,
know
we
the
look
next.
forward to it.
You know the next series would be bringing on, I don't know, interviews with your friend circle, and just talk about money. If that's
Yeah.
even a thing. If that's possible, that would be a new series.
Yeah, you know what? I have one guy at work because he started following Paul and I on our channel. So he started asking me more questions and more questions. And I was just like, watch more videos, not just Paul and I watch, you know, watch.
Start watching me. Yeah.
I told him, I said, make sure you watch JJ's channel. You know, watch more than just one or two people, get different opinions on everywhere. And it was funny because I guess he's heard us talk about MSTE so much and HHIS that MSTE was
boy.
one of the first ones he bought into.
Right.
Oh no.
So actually,
Boy.
yeah, exactly. He loved the first distribution he got, but he's like, oh man, you know, I'm down 25% already. And then I showed him my account where I'm down like whatever, 55, 58% on MSTE.
What's
And he's
your
like, "Aren't you worried?"
what's your MST?
I'm going to say it's probably about 20% right now.
Oof. Okay.
Yeah. Yeah. You know what? In all honesty, I sort of went in a little deep because I'm old. I don't have a pension. And I really want to get to, I know myself.
Do you
when
have
I
a
get to,
group plan?
No.
no, when I get to
Really?
$2,000 a
Okay.
month of distributions, I will definitely relax on the aggressiveness of my portfolio. But my wife and I, we also have a rental property that we have.
Oh, nice.
So
Okay.
yeah. So we own a like condo in Burlington that we rent out.
Mm-hmm.
So like our end goal is the house that we're in right now, we'll sell it eventually at some point and we'll move into the condo and all the money.
Did you guys ever get that appraised recently? The rental property?
No, we
You guys
haven't had it
keeping
appraised.
Are you guys planning on selling that at some point? Because of the fact that it is a rental property, you will have a
No,
huge capital gains trigger.
we have no intentions of selling it. Our goal
Okay.
is probably in about 4 to 5 years, sell the house we're in right now and move into the condo.
Uh,
And
okay.
all the money from this house will go into investments, and that'll be, amazing. It'll be a lot of money, and that's what will fund my retirement for my travel and fun and meat.
Right on.
Hey,
So
by all
we
means, if you hate your job, do it next year.
yeah, if I could, like, my wife works for Air Canada,
Mm-hmm.
and to maximize her pension, she needs to work for about another 5.5 years to maximize
Okay.
her pension. So she wants to stay on that long. She could retire now, but her pension wouldn't be very big. Like, she has enough years in, age plus years of service. Trust me, I would retire now. I love my job, but I would
Do
retire
you
now.
love it that much?
I really enjoy going to work. I have a good group of people I work with.
Mm-hmm.
The ownership is really good, but don't get me wrong. I would love nothing more than for 5 months a year to travel.
Yeah, that would be nice.
We have that huge benefit of, well, Paul too. Our wives work for airlines. We get to fly very cheap. So, like, in February, we plan on going to Costa Rica. The flight will be
Ooh.
whatever, $120. Yeah, like, it's mine and my wife's favorite spot to go. The flight return is $120. So, and then we rent a house while we're there, and, near the beach or on the beach. It's a relative cheap vacation for us compared to what most people do, because we get to fly so cheap. And that's our plan for retirement. We're going to spend 5 months a year out of the country, having the condo. You don't have to do anything. It's a condo. It's not like a house. You don't have to worry about anything freezing. And we'll travel for 5 months and spend 7 months in Canada.
Hmm.
I got it
That's a goal.
planned. I just need to talk her into it.
Yeah.
Fair enough. Fair enough. But that's a nice vision.
Yeah, it is. It is.
Yeah.
It'll come true. It'll come true when she's ready.
Eventually. Yeah. Yeah.
But how about you, Paul? You think you'll ever get Tracy to retire?
I'm pretty much in the same boat. When she's ready, when she tells me she's ready to quit, which probably won't be for another 10 years.
Yeah. Yes, Tracy loves to work.
She's got 3 jobs. She's a workaholic.
Wow. Okay.
Yeah. She's like you.
What does she do?
She works for Lennox. She works for WestJet.
Okay.
And she's a waitress.
Does she love doing all 3 jobs at the same time? Like,
She
damn.
does. Well, Lennox,
Oh.
she's been there for a long time. I think she would like to retire from there and just work at the other 2. But she's just waiting until it makes sense for her financially. It's
And
the fun of having
Lennox has
kids,
been-
JJ. We got other responsibilities because we have 4 kids altogether.
Whoa. Okay. Are any of them still at home?
They're all over the place. We got one at university, one lives at home and goes to college, one lives with his dad, and who am I missing? Braden. Braden lives at home.
Yeah.
2 at home and 2 away. But
Yeah,
we help. We help.
Yeah, I have 2 kids. My daughter has her own house already, and she's younger than my son. My son still lives at home, but he's going through an apprenticeship for to be an electrician or industrial electrician.
Nice. Okay.
But I don't charge him rent or anything, but I make sure he maxes out his first-time home buyers every year, which is I think it's $8,000 to max it out.
It's
I make sure he maxes
$8,000
that
a year.
out every year. Yeah, and he must make monthly contributions into his TFSA. So rather than pay me
Okay.
rent and then just give it back to him when he moves out, I just force him to make sure he's investing his money. And then I'm happy. But I told him, once you become fully licensed, which should be another 2 years, you'll have 6 months, then get the heck out.
Pack your bags.
He's 26.
Okay.
Yeah. He's a good kid, very good kid. But yeah, by then he'll be 28 and time to get out.
I think it's at that age, right? So
Yeah, exactly. And by then, he'll have 4 or 5 years of putting money into his first-time home buyers, putting money in his TFSA. He should be well enough off to be able to get his first house. I
that's
won't
fair.
let him rent. Yeah, I told him renting is just a waste of money. I told him you have to buy something.
Arguably speaking, if you were to take the money that you were to buy a house and invest the proceeds, then you could be on par or even better, technically speaking. But
Yeah.
you have to
But
be, the thing is, you have to be very sophisticated and disciplined to match
That's
that.
right.
Because technically,
Yeah.
if you don't do that, well, then buying a house, arguably, there's no competition if you don't invest the difference had you were buying
Yeah.
a place. But if you were, so that's me basically. That's my scenario. Like I'm choosing to rent. I don't even want to buy a place because I don't want to deal with a headache anyways. So I invest everything else, which means, but then again, I am a special case. So
Yeah.
probably.
Yeah. Well, you're doing well. So
Well, maybe it's just us old guys, JJ. We just believe it, having house is, usually you don't lose owning a house. Usually it's always
That is true. Yeah.
appreciating.
well, we
Well,
bought it.
unless you
We
technically,
bought it
if
the
you
right
if you
time
miss
though.
it, don't you? If you miss your mortgage payments, your bank will foreclose your house, so you could technically lose it.
I don't know.
Yeah,
I've
you
never been in
can.
that situation.
Yeah, I've never missed a payment, but yeah, you
Not
definitely
a
could
chance.
if you. Yeah, if you.
But unless, yeah,
Because as much as I'm a gambler and everything, with me paying my mortgage, I'm always 1 month ahead of my payments. My
uh,
December payment was in, I think it's the 12th of December, like the 12th of every month, my payment comes out.
mhm.
I put my money in beginning of November for my December payment.
Oh wow.
I'm deathly afraid of ever missing a payment on anything. I don't use
Don't
credit
you want to
cards.
invest that? Don't you want to invest that 1 month and then take out what distribution you could have collected and use that towards your mortgage payments?
No, it's not a
That's
bad
a thought,
idea.
right?
Just it is. It is a thought. For me personally, and how I like to pay my bills and everything, it's a dead thought. I would never think of it. I like to make sure everything. I I like to know how much money I have at the end of the month, and I try to put as
Mm-hmm.
much as I can into investing. And in the last 4 or 5 months, it's been a lot more every month than I usually do. Like,
Mm-hmm.
used to be, I'd put $200 to $300 a month into my account. Now I'm $500 to $800 a month into my investing account. Paul and I did a video. It's like my wife and I, we used to go to the casino, dinners, but in the last 4 months, Paul, Anna and I have, other than the cruise ship, we went one night, but we don't go to the casino anymore. We don't spend any money there. All the money's just into investments, into investments, into investments. So it's awesome. I love it. It's my new addiction.
He's addicted to
Funding
investing
my
now. It's just
account.
good. That's
Yeah.
good.
I wish I had
That's
have
a
done
good
this.
form of obsession.
It is. I'm kicking myself because I've had a good job that pays very well now for 20 years. And, other than, I think we talked before, other than some amazing stories, I don't have a lot to show for it. So now I'm playing catch up at
Your
this
job
old
didn't.
age of,
You've been with your job for over 20 years now. They never offered a group.
no, no.
No.
There's nothing like that in
He's moved
automotive.
from different companies, like different dealerships, different
Okay.
owners.
Yeah. I don't know how familiar you are with automotive, but usually people sort of change jobs every 3 or 4 years. I'm not like that. I've been doing this. Well, I'm 53. I've been doing this since I was 19 out of college, 20 out of
Okay.
college. And this is only the fourth dealership I've worked at. I don't
Wow.
change jobs
Is that
very
rare?
often. I like to
Okay.
stay. And,
Yeah.
but I've been so silly with all my money over the years and I regret it. I really do. But, I've turned it around. I've changed.
There's never a later time than the present. So
Exactly.
yeah,
Exactly.
you make the most of
Yeah.
what you have now.
Exactly. And in some of my videos, I've said that too about people, to people. It's like, I waited very late in life and now I'm playing catch up, but investing, and to me, it's a heck of a drug.
That's
Like
good. That's a good
it's been
obsession.
addictive. Yeah, and it really is. It really is. I think I really annoy my wife sometimes. We sit out front of the house, have a glass of wine, and I'm showing her my portfolio. I'm like, look how much I invested this month. And she's like, yeah, good for you.
I relate to that so much. I'm the same way.
Yeah.
It's bad.
Yeah. But it's good. It's good. I really love it. I really love it. And it's good. Our group of friends, we do talk about it. Eh, Paul? Like you, me, and
Yeah. You know
Mike,
what?
and
Yeah. We've gotten a lot of people into it now. So
Good.
yeah.
mostly guys, I think, but there are some girls who ask as well. Like some of the wives ask questions, and
Mm-hmm.
but I find that some of them, like they say, they find out how much I'm making every month, and they're like, okay, you got to sit down and you got to help me and teach me what to do and tell me how to do whatever. And it's like, sure, no problem. Let me know when. And then they never tell you. Then they never want to get together and do it. So
Yeah, like even last month, I finally got my daughter Megan to open up a trading account with
Mm-hmm.
Simple. I told her, I'll give you some money, fund your account. And when she got her first distributions, she sent me a screenshot. She was like, "Oh my God, I can't believe it! I got like $7." And I was like, "Oh." No, I was so encouraged. I'm like, "That's amazing, good for you. You know what? Put a little more money in it. Next month it'll be double digits,
yeah,
and in a few more months it'll be triple digits, and then you'll see the excitement really grow." Because that's
yeah,
what it was like for me, and for me it wasn't that many years ago, but the excitement just grew.
Oh yeah.
yeah,
So I'm glad to see she's excited about it. It's amazing because every
yeah.
year she's like for the last couple, what do you want for Christmas, Dad? And I'm like, I want you to open an investing account. I'll fund it. You open it, and she finally did. I was excited.
I told my
They-
son I'm going to give him money to put in his TFSA for Christmas. It's not an
Hey, why
exciting
not?
Christmas present to open, but it's a present that
They
will
don't.
pay dividends.
Well, yeah, exactly. For the rest of his life, you know. Oh man, like
You're
you
giving
always hear people
you're
say, "I
helping to
wish I
build
could go
that
back to
financial
being."
education for your
Yeah,
kids, and
Yes,
arguably that is probably the best present you can give to them, building
right.
that
absolutely,
discipline
100%.
early on.
They need to
Exactly.
have classes about this in grade 5, 6, 7, 8.
Yeah.
Yeah, the government doesn't want you to know how to be independently wealthy because then you won't have to
Yeah.
work, right? Then they
Yeah.
want people to work
They
and pay
can't have that.
taxes.
Yeah.
I mean, arguably, the world of credit is the biggest industry of making money. So
Yeah,
you can't have too much financial awareness, right? Otherwise, where is that
exactly.
credit going to come from?
Right,
Yeah.
right. People think about it. People, car loans, mortgage, credit card debt, any kind of debt you can
Yeah.
think of nowadays. You can buy anything on debt. I love it when you buy something on your credit card and it asks if you want to make payments on it. Like not even to pay your credit card off, but would you like to pay this purchase over
Would you put
4 months or
would you want to
5
do
months?
installments? Yeah.
Yeah, that blows
And
my
then
mind.
you find out that installment that you're paying for, you're getting charged like a 20% interest rate on it. Well,
Exactly.
Well, that's super common, Paul, in other countries. Like it's like that in Brazil. You go to the
Wow.
store and you put something on your credit card. It's not,
Jesus.
you're almost not paying the credit card company. You're sort of paying the store almost, but over X amount of payments. It's very different.
Yeah.
Wow. That's something else.
Yeah.
All right,
Yeah.
Sean. Well, you got a long weekend coming up. You better go to bed.
Yeah, absolutely. It's getting
Tomorrow's another
late.
day.
Yeah. Well,
So
thanks again, JJ. We appreciate
this
it.
would be our first coffee margin chat. What do you want to title this?
I don't know. Figure it out when we're awake.
Sounds good.
Yeah.
Yeah.
We don't even have coffee mugs for this one.
No, no.
A good night's tea mug,
Yeah.
chamomile tea, something
I
of
like
the
it.
sorts.
I like it. I'm a tea
Did he?
drinker. I love that.
Did he say tequila?
It does have tea in it, doesn't it?
Yeah,
It
it does
does.
have tea in it, so
It does
that
have
could
tea
be.
in it. I meant chamomile tea. All right, guys.
All right.
We'll
Thanks
talk to you
again,
both
JJ.
probably
We
tomorrow.
appreciate it.
Yeah.
Of course, always a pleasure.
Yeah.
And
All
we'll
right,
see you in the next
guys.
one then.
Yeah. We'll see you in the next one. All right, guys.
All right, guys. We'll talk and we'll plan the next one.
All right.
Sounds good.
Hey, JJ, mine says 99% uploading. Should we stay on for a bit?
Yeah. Let me stop the recording. All right, gang. This was a great chat. So, see y'all in the next one. Bye for now.
All right. All right, guys.